Welcome to Bears in Exile. Today is May 11th, and we're going to look at the Dow, SPX, the VIX, TNA, and UUP. We had an ugly day in the market today, unfortunately. Our hopes for a nice, strong reinitiation of the uptrend was dashed by this big, ugly red candlestick. And this wasn't, as far as I am concerned, this wasn't the fault of stocks today. The dollar just got really strong. The euro just fell to pieces. There's, several stories out there trying to explain what the deal was with the euro. So, you can pick whichever one that you want and go with that. But today's action, as far as I'm concerned, completely was currency issues. So where does that leave us? Well, we can see that the short-term moving average has now ticked down again, and the down target there has already been met and exceeded by a very good amount. And you can see on secondaries that we now have a further downtick on the MACD histogram, downtick on the MACD, and everything else also pointing down. So, is this a whipsaw? Absolutely, it could be. If the euro regains its footing tomorrow, we could have sideways action or even a green candle. But then again, if the euro does not get its footing, then we could go down and test the bar. And the bar is only at 12,500. It's not that far away. Today definitely hurt and can spook people. All the longs that I had got stopped out, unfortunately. And I did a little swing trade on shorting, and that went well. As soon as they got stopped out, I switched, and that's in the green. And the stops on those may be taken out tomorrow as it goes back up, in which case I'll flip again. But overall, the chart is still bullish. You can see that we have, this low is higher than this one. Not to say that this is the end of it going down, but if we theorize about it and we look at our lows, low, 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 they're still moving up. The long-term moving averages are still pointed up. The secondaries are all pointing down. And then your highs, high, high. So that makes us question, okay, well, was this candle yesterday a high? Well, we just don't know. We don't have enough information yet. But if it turns out that that was a high, that would be extremely troublesome. So something definitely to be on the lookout for. And tomorrow's candle should hopefully tell us a lot. But I would be looking at this high right here, and I'd be looking at this low right here. And the first one to go will probably be the indication of what's truly happening here. But and also watch the stinking currency. And SPX is the same, so I'm going to skip over that. Although on the SPX, the reverse head and shoulders line, we went down, we touched it today, and came back up. Is that all that it's going to do? Maybe tomorrow it'll test it again, maybe it'll just bounce off of it. We just don't know at this point in time. Gotta watch that high and that low. And then we have TNA. Stronger than the Dow, stronger than the SPX. And it took a good hit today, but it's still it's still in the running. It's in exactly the same position as the Dow and the S&P. I mean, What else can you say? Gotta watch this high, gotta watch that low, and we do have a flat line now above the bar thanks to today. So if we had another nasty down day, there is a potential that it could do a complete crossover and put the hurt on the bar. That is possible, since it is, there's a little bit of room here for it to rapidly, expand and point down. And on the other hand, it's a flat line, so it can also rapidly spread out and go up. So, and then our secondaries are all fairly neutral with a slight bearish slant. Not much to be gleaned there. And UUP, the dollar. This is what messed us up today. We talked last night about, we had a 2-cent move here, and we had a 60-point move in the market. Whether that was all due to the 2 cents is debatable, but definitely there is some correlation there. And today, we had a 20-cent move, and the market just fell to pieces. So does it look like it's going to put the hurt on the bar? Well, it's already entered the bar prior to full separation, and we don't even have full separation yet. The angle has improved for its ascension, but it's just the long-term moving average is barely having an uptick right here, and it's only on 2 of the long-term moving averages. I still think that it has a lot to work through to go much further, and for it to pop out the other side and run still looks highly unlikely to me. And we're just going to have to get more data. It's that's just it. We need more data, and then trying to find some other telltale signs. Looking at the VIX, it's kind of surprising to me that, given the swing that we had today, the VIX didn't do more. Really, it didn't, and you can see here that it got thrown out of the bar. We do have some very basic separation here on the short-term moving averages going up. They are outside of the bar, so if there is another down move tomorrow, we could see this have full separation prior to entering the bar, and that would put us right about the 1770 area as a target for the VIX putting the hurt on the bar. But we just don't have enough data, and looking at it just the way that it is, we still have separation that it has to overcome in the long-term moving averages, but this separation here of the short term is a factor. It looks much more likely to put the hurt on the bar again than like the UUP does. But that's it. That's my take on the overall market tonight, and tomorrow is going to be very interesting. Certainly we need more data, and it's truly unfortunate that we did not get that initiation today like we had hoped for. It was certainly primed to do it. It was pointing in the right direction. Everything looked right about it, but NDEs can do this to you, and currency can do this to you, and normally the two are intertwined. So lots of news tomorrow. Ben Bernanke speaks. Normally the market likes what he has to say, so that is a potential factor tomorrow. But that's it for now. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.